Welcome back to this very special edition of Indianomics. We are speaking with renowned banking expert and former Reserve Bank of India Governor Raghuram Rajan. Dr. Rajan, let me just dwell a little more on the banking issue. Would you say now that, at least in the US, the financial markets, equity markets in particular, will come back to, swinging between inflation and growth fears and will be off this banking crisis issue? Will it move on from that?
Look, it's hard to tell that it's over, right? I think the Fed and the Treasury have taken the actions that should make depositors feel comfortable. But I think it's what still remains to be seen is if we see a silent run going on. Because even though the Fed, for example, has told banks, you can put your bond portfolios to us and get the full value, there is still a capital loss that has to be eaten over the coming year.
Yes.
And so, depositors will scrutinize their banks to see, is this bank going to be safe? How much has it invested in long-term bonds? What is the mark-to-market losses it has to take over time? And remember, it's not just bonds, but it's also loans. The real issue is that we had a period of extremely easy liquidity when interest rates were very low, where banks splurged on longer-term assets in an attempt to increase yield. And now we've seen perhaps the fastest increase in interest rates over the last year, 4.5%. And of course, that really does a lot of damage to long-term asset portfolios. And so where those losses are and how they're absorbed is something that depositors will look at keenly. So I don't think we can declare game over. We have to watch and wait and hope that what has been done is enough.
Okay. So either it is these credit concerns or it is the Fed going hammer and tongs at inflation. Either ways, do you think we are headed for a fairly serious recession in the US?
Well, I think it's hard to imagine inflation will come down without a recession. And in fact, the data, the evidence is that every disinflation we've seen since the 1950s has come with a recession, a fall in growth over multiple quarters. Now, that said, I think there is still a question of serious recession and moderate recession. The problem with a financial sector-led recession, financial sector turmoil-led recession, is those tend to be longer in duration, as we saw with the global financial crisis. I hope it doesn't get there, because then that transforms a inflationary situation to perhaps even a deflationary situation. We don't want to go there. We want a disinflation. And so I do hope that we get, at worst, a moderate recession. But we are, in some sense, very optimistic if we believe that it'll still be a soft landing.
Okay. So now we come to India and to emerging markets. Given the developed world or the US is in this kind of a situation, and we know that China is barely recovering, what's the takeaway for India? Is it going to be a extreme, serious global headwinds? How can that impact growth?
Well, I mean, there will be potentially headwinds. Again, we have to see how the developed world sort of progresses. To some extent, we do need to up our rate of growth. Even before the pandemic, we were down to 3.9%. During the pandemic, we've been at averaging 3.2% a year compounded growth. So over the last 4 years, we're about 3.4%. And obviously, that is unsatisfactory for India. We need to up our rate of growth. There are pieces of good news. I think the trade numbers over the last few months have shown that our service exports, especially skilled services, is picking up very strongly. And this is something I've been saying for a couple of years now. This is something that will be India's strength going forward. And I'm glad to see that it is showing up. On the other hand, manufacturing, even within the country, is not doing that well. The big question is private investment. When will private investment pick up? We're seeing capacity utilization 73, 74%. It's been that way for a fair amount of time. And we're not seeing, we've seen strong government investment in infrastructure. We're not seeing the private sector ramp up. And of course, with private consumption slowing once again, I think there are worries about India's growth going forward. We certainly need to up the rate of growth in order to employ fully the millions of youth coming into the labor force. And certainly, if you look back at the past, we need to do a lot better than we've done in the last 4 years. One last point, if you look at the pandemic experience in India, you look at our growth then relative to our growth in the 5 years before, we've done very badly during the pandemic relative to other G20 countries. We're at the bottom of the pack. So there's a lot to recover from. And I hope we can do that over the coming years.
Okay. Well, would you at least agree that the Reserve Bank can kind of decouple from the kind of rate positions that the developed economies have to take?
Well, I do think that inflation in India may be of a different nature. That is something the Reserve Bank will have to, take a view on. There's some signs that, over the year it may come back within the Reserve Bank zone. So it will have to take a view. Certainly, with interest rates where they are, where policy rates where they are, the Reserve Bank has room, if inflation comes down, to help support the economy. But that is a decision the Reserve Bank will have to take. But it'll have to also, watch and wait and see how inflation plays out. And that's something that, I don't want to second guess the Reserve Bank on.
Okay, no, I just wanted to include that because you spoke of those services exports. We've got the February data. And the difference between imports and exports, the deficit, goods and services, as narrow as 2.8 billion. Last month, it was 1.28 billion. We are in a current account surplus quarter. So isn't that a big achievement? And therefore, the Reserve Bank does not have to worry about any run on the rupee now. Isn't that a signal achievement?
I think the issue is not so much the rupee itself, but inflation. I think central banks should not worry too much about the position of the currency. Instead, focus on inflation. The rupee will do whatever adjustment it needs to, and I think that adjustment should happen to the extent that Indian growth, for example, needs the additional benefit of more exports. The rupee will have to do appropriate adjustment, but that will be helpful to Indian growth. So rather than worry about the rupee vis-a-vis other currencies, I think it's important for the Reserve Bank to focus on its primary mandate, which is keeping inflation under control.
Okay, I guess that's what they're going to do when they meet in April. Governor Rajan, actually out of time, but thank you very much for sparing time for us and explaining your view of the global financial problems in the banking sector. Well, the key takeaway is that to a large extent, Governor Rajan thinks that the banking crisis in the US has probably been contained. But of course, you can never say never. The Fed still has a lot of work to do with respect to inflation. We'll wrap up on that note in this edition of Indianomics. Thanks for watching.